This was a massive fraud. So they raised almost $1 billion. It's the third largest fraud in Canadian history, but they continue to raise money. We're just so soft on white-collar crime in this country, and they're both going to walk away probably with 9 figures. Those guys would be going away for decades in the US. And that is bull. And that's, unfortunately, that encourages other bad behavior here.
Yeah, Ben, you don't realize what you just signed up for, pal.
Hey, there's a bubble.
We came to the only province that's open for business, Ontario.
Are we there yet?
So Rich, there's one of these in South Dakota as well.
Are we allowed to dig for oil there?
I think they do.
Why do they call them the Badlands?
Oh, it wasn't the good lands, I know that. And we're looking for answers to a handful of questions.
I don't know how giving people more crack is a good way to deal with
Crazy that it's
crackheads.
still like people are still debating it. Like,
Yeah.
what are we debating here?
And what is the LCBO? Is it just another economics report that we should be reading? And of course, how will Ben Rabidoux save this great province from the scourge of white-collar crime?
What you're seeing out there that looks like it's a couple feet deep, that's probably like 30, 40 feet deep.
Come on.
No, I'm totally serious. It's so clear. It's super deceiving how deep it is, yeah.
I'm thinking I want to sail the Great Lakes.
Welcome to the Loonie Hour road trip. Crack a cold one. We hope you enjoy.
Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets. Nervous about the volatility of public markets? Looking to invest in Canadian real estate but not finding the right opportunities? Neighbourhood Holdings may be an option. Nearly 10 years of consistent performance, Neighbourhood aims to provide stable income while preserving invested capital, target net yield above 8%. At the heart of the strategy is Neighbourhood's mortgage product portfolio of first position 100% residential mortgages across Canada with an average loan-to-value under 55%. Neighbourhood partners with mortgage brokers and financial institutions to support quality borrowers in transition who may not currently qualify for traditional financing and have a temporary need for capital. Neighbourhood's portfolio has no exposure to commercial, construction, or bareland properties, is geographically diversified across major urban and suburban centers in Canada. Check out the links in the description or visit neighborhoodholdings.com to view the offering memorandum for investors and advisors or to explore mortgage broker partnership opportunities. This is not advice. Please consult a professional advisor before investing a loonie in any of these investments.
Output price component, there's a margin component. And so for Canada to have a 46 piece, it means it's negative sort of across the board.
Well, Squirmer Tiff Macklem held rates last week.
This is
One more meeting coming up, right? July?
Yeah.
2 CPI reports. Wow, this is a beautiful place.
Man, this guy is rich. Holy smokes.
Amazing. I'm not sure I approve that art though. The lawn art.
Rich, smell the flowers.
I do love flowers.
What's up, baby?
All right. What's going on, boys? Welcome. Come on, see you, man. What's up, Boomer?
Hey, what's up, man? This is great. What a beautiful
Glad
place.
you guys could be here.
Yeah, I can't believe we're here for a whole week.
Wow. What's the address again?
Come on in, boys.
Wow. This is
Holy shit. Looks nice. Thanks, real nice. Come on in.
well, it's rich. It's almost beer o'clock.
That's right.
Let's get it going.
Do you have a permit for that fireplace? This is beautiful, Ben. Thank you for having us.
Of course. Yeah, glad you guys could be here.
Cool.
Glad to fuck this place up. Looking forward to it.
Good Canadian flag, elbows up, knees down is our addendum to that now.
You are missing one flag, though, I noticed.
Yeah, that's right. Wow, I really love all the lawn art. It's really beautiful. Where's the boat?
Hey, boys. Good to see you guys.
Uh-oh.
Ben, you have my favorite tree.
Which one's that?
Cedar.
Rich.
Look at all these cedars.
Rich.
Yeah.
This doesn't work, man.
What's going on?
No glass or bottles from this point
I'll make
on.
an exception for you guys.
yeah.
That's more just for my kids.
Yeah, Ben, you don't realize what you just signed up for, pal.
All right, boys, who's going in?
He's going in first.
Welcome back to Loonie Hour, episode 192. As always, joined officially now for the first time ever, joined by 3 amigos. Ben, this is your 3rd time on the show. So you're now officially, I think, the third amigo.
I'm honored.
So we have 4 amigos now, Keith, or 3?
I don't think we have a fourth. Do we have a fourth?
Well, now we have a fourth.
Anyways,
I'll take that honorary
people
spot.
have been complaining since episode 1 that I'm not joined by 3 amigos, I'm joined by 2, but now we officially have the third. We are joined at an unlocation, Bob Sacamano's cabin. Again, in the show notes, the official address will be listed there. So if anyone is interested, come on by. We'll be here all week and probably next summer as well. So for Ben's 4th appearance.
And by the way, it is St. Catherine's. That's where we are.
We'll go with that.
St. Catherine's.
That's
Anyways,
right.
check the show notes. But Ben, a pleasure to have you back on the show. This has been quite the production. So really looking forward to making the most of it. But we've been talking a lot about, you've been talking a lot on the Bank of Canada. Obviously follow a lot of your research, Edge Analytics there for anyone that's interested in the real estate space. You've been talking a lot about the Bank of Canada. You've been a little bit more bearish. Obviously the BOC kept rates, was it last week? The Squirmer.
Yeah.
Squirmer didn't move. He didn't squirm. He didn't really squirm.
Yep.
What was your takeaway? Did you think that was the right decision?
Well, I mean, that the market's had it like a 25% odds of a cut. So the market was right. I thought the odds were a little higher. It's a strange time because there are clearly signs that the labor market is at a minimum softening. And you got to remember, like, as Rich likes to point out, there are 2 jobs reports in Canada. The one that is a little more timely but is a little more volatile is the labor force survey. And that one's been okay. It's been squishy, but not great. But the second is the payroll number. And that's a better quality data set because it actually draws on official remittance data. And that's been terrible. We've seen 90,000 job loss in the last 2 months, according to that data. We're now basically flat on a year-over-year basis for employment growth, which we really don't see outside of recession. So, it's a weird time in that the inflation data looks pretty stable. Depending on which employment data you look at, you could argue either way. I probably would have cut if I was them. But the market priced that as an unlikely outcome, and they were right, I was wrong.
So I should add that Doug Ford agrees with you.
Yeah, man. Okay, can we talk about that?
Yes.
That is like emerging market bullshit right there. Like, there's a reason why you need your central bank to be independent and not subject to political influence, because every politician wants rate cuts. So if you want to get into an environment where you get runaway inflation and people lose confidence in the value of the currency, that's a great way to do it. So Doug Ford, shut the fuck up.
So just for context, Doug Ford was out this week and he basically did a press conference saying we have to get these rates down. He basically berated Tiff Macklem, the Squirmer. And he said, quote, "I will be on Tiff like an 800-pound gorilla."
We should throw that into ChatGPT.
Boomer, what do you think?
Well, first of all, is this his first time commenting on monetary policy?
It's not.
No, remember him and David Eby in BC were
Said about a year ago, I think, or something like that.
What do they want a year ago?
He wanted lower rates.
Lower rates.
They never want higher rates.
Didn't he also make a comment about the condo market being really soft?
Yeah,
and that was one of the reasons?
We have a lot of unsold condos. Like, I think it's interesting though, right? Because like all these politicians are starting to figure out like what's been, buttering the bread, which is the real estate.
Yeah. And they know
side.
who donates to their campaign.
Yeah.
It's also great because now the whole world's gone global macro. As soon as you have, Ford is going that direction, EV is as well. But Ben, a couple minutes ago, you mentioned, the job losses in the private sector, 90K, you
90,000. Yeah.
Excluding the COVID experience, when's the last time Canada had that? And also exclude 2015. I want a lot of the excess.
No, it wasn't even
Exclude 2014,
Yeah, and
2013.
2008
but I said
and 92.
But 2015
2015
had the Alberta experience,
Yeah.
right?
Yeah, no,
we
but
don't care about
Even
Alberta.
then, you didn't have job losses like that.
So
You got to
when
go back
have we had it before then?
2009. 2009. So
Let's
this-
exclude 2008. Let's go back.
I don't know beyond that.
No, but
No,
the
but-
reason I say that, because this is something that we've been talking about for quite some time now, is that if you exclude all of these crisis moments that we've had, the pandemic, the housing, the tech bubble, and you go back to a normal economic cycle, and we've also talked about before that we had a 10-year period where the global yield curve has been suppressed, where they purposely said no one's allowed to have a recession at all. So again, I think we are going to the point where a cycle is being rediscovered, and yet you have the premier of here is it Ontario? That's what someone said today.
I didn't say it.
God,
Who'd you
this
hear
is-
that from?
This stupid
The
joke.
hot dog lady?
No, it was someone else that said it on the very long road trip we had there today. But my point is that no one has experienced this yet. And is it going to trough from what you see, or is this the beginning of that eventual, job loss experience?
I mean, you never know, and the economy's dynamic. It's always more resilient than you think. But what I would say is, if you look at the data around hiring intentions from, like, I know Rich likes to track CFIB, which is the survey of small businesses. They're in a net negative hiring position for the first time since 2009. In other words, more businesses being surveyed are expecting to cut staff for the next 3 months than add staff. So again, like, I think there's a sign there that businesses, because of the tariffs, because of some of the uncertainty, have at a minimum put hiring on hold. And you're starting to see the early signs of that. And even the Bank of Canada commented on the labor market starting to get kind of soft. And I think they're right. So, we'll see. I think if I was them, I probably would have cut, just because, I don't think there would have been any harm in it. I don't think you would have caused a lot of, the currency's been pretty strong lately. So I don't think you would have run the risk of.
Would you prefer a Twinkie or an almond croissant patisserie?
I didn't bet. I mean, I guess I wasn't.
Have you
part
seen
of
this
that
guy's
official
baky
bet.
that he goes to? He got
It was pretty good.
Yeah?
It was pretty
Is that
good.
what you
good
ate
bakery.
last time? So how did that go down? Because you guys,
I bet
you
I bet for a cut.
had cut.
I was
And you had cut.
I had cut.
I had
you were the
no,
only
I
one
had
who got
no
it
cut.
right?
I just went with market odds, which is
Steve had no opinion.
yeah. I had no.
Well, the
opinion.
market is indeed smarter than all of us.
Yes, it is.
Yeah.
So
Except for
Ben,
Steve.
but Ben, to that point, so you flagged actually in a recent tweet, you said that in May, this is again per StatsCan, the unemployment rate amongst returning students age 15 to 24 was 20%.
Yeah.
So 20% compared to 11.4% in May of 2022. So what does that mean when you say unemployment rate amongst returning students? Is it only students age 15 to 24? Like you have to be.
You got to be a student. Yeah. So you can't be
Okay.
graduated.
What is the? I'm just curious. What is the general unemployment rate amongst, let's say, Canadian youth? If
You mean participation rate? Because that's low.
Well, I know the participant, like unemployment rate amongst, like, what if you don't go to school? Like, what
It's
if
not
you're
20%.
what if you're 19 years old and you don't go to you don't go to post secondary?
Yeah, that's a good question. I don't
don't
know off
know.
the top of my head. Look, here's what we know. We dramatically ramped up the number of international students in this country and a lot of young temporary workers that came here from other countries. We did that at a time where, if you listen to the employers, the labor market was just exceptionally tight and they had no option to find labor. And now we're discovering that was probably BS. And we have a dramatic overabundance of labor and kids can't find jobs. So it gets back to, I think, a theme that we've all touched on in the past, which is that the prior government really did a number on our immigration system.
We're still trying to fix that and figure it out, but
They're trying, yeah.
But on that point, so there's kind of two things I want to ask you, which is, number one, there's a recent article going around. I had people send it to me, and listeners of the Loonie Hour sent it over to us, that Canada apparently took in 817,000 new immigrants in the first 4 months of 2025. Now, before you kind of comment on that, for those that are listening, is the discussion around the federal government has been that they want to take non-permanent residents down from 7% of the Canadian population to 5%. And so there's going to be a drastic reduction in non-permanent residents. So is this headline correct? 817,000 new immigrants in the first 4 months, or what are we missing here?
No, that's not. Well, so I haven't looked at the data, but if that data is at all correct, what it's referring to are admissions. Okay. And that's not the same thing as population growth. There's always a lot of churn in the temporary resident cohort. There's a lot of people coming, people going. There's a lot of churn. So prior to the last couple of years, that number was regularly negative in any quarter. You had more people leaving than coming. And then the last couple of years just exploded higher. That number doesn't sound correct even from an admission basis. But even assuming it's correct, let's take it at face value. It's not reflective of the actual growth in the Canadian population. It's much lower than that. In fact, we just had if you look at Stats Canada's official quarterly population estimates, which is on a net basis. So that includes people coming, people going.
Dying.
Yeah, or people dying.
And being born, sorry.
Then we had the lowest quarter for population growth since 2021. And you can corroborate this. You don't have to wonder about this. So we just had the big telecom companies report, and they actually have a reporting where they discuss net additions of cell phone users. Okay, so if you come to the country as a temporary worker, as an international student, it doesn't matter who you are, you're getting cell service. You're either bringing a phone and adding a plan, or you're buying a cell phone when you get here. So it's a really good barometer for what's happening with total population growth. And it's the lowest it's been in 5 years. That quarterly addition was almost nothing. So anybody who's trying to peddle a narrative that today the population is booming, they're doing that for political purposes. It's not. It has boomed. We have a problem with the size of the population from kind of the residual impact of the last couple of years, but it is not still expanding at anywhere near that rate. That's just a misleading stat.
I'd argue you can probably see that reflected in the rental market.
100%. That's the second thing that I track is occupancy levels at the big apartment REITs. And they're doing exactly what you would expect, which is they're kind of drifting lower. So you're getting rising vacancies, falling occupancies. And broadly, when you see some of the rental market data, we're seeing some softness in rents themselves across parts of the country. That is not conducive with adding 800,000 people in the last 4 months. I mean, whoever's saying that is just, they don't know what the hell they're talking about.
Then I have a question then. So then why is the unemployment rate rising? So in the LFS report that came out last Friday, we talked about youth unemployment, but even the regular unemployment rates were rising. I think that they're the highest they've been since 2012, excluding COVID, obviously. And it's across the board. Obviously, baby boomers like Keith, they're sitting pretty. But I mean, so is that related to the population growth? Is that weakness in the economy that you're seeing? I mean,
the simple answer is I think it's probably a reflection of weakness in the labor market itself. However, there's a very technical explanation, which maybe is beyond.
No, I like a technical explanation.
Okay, if you want it, I'll give it to you.
Absolutely.
Okay.
Here we go.
All right. Listeners are going to want to fast forward for a couple minutes. So I have a view that actually what's happening right now is that Stats Canada is overestimating population growth in their LFS models.
Okay.
And the reason for that is they actually use a 4-quarter rolling population growth for the temporary resident cohort, which is normally fine. But when you get into a scenario like today where that cohort is actually shrinking, that takes a while to show up in the LFS estimates. And so as a result, they're overestimating population growth. So the way that the survey works is you call a handful of people, you extrapolate across the entire country based on your estimates of population growth, and that gives you the employment number. So I think they're overestimating population growth, which means they're overestimating employment growth, and it also means they're actually slightly overestimating the unemployment rate.
Is that why it's deviating from the payrolls number?
Yes, that's exactly right.
So the year-on-year growth on the payroll number is much weaker if you exclude self-employment, which that's a chart I stole from you, actually, if I'm honest. It's almost negative year-on-year basis. Correct. If not, it's just above positive.
And that is normally, when you get a big deviation between those two surveys, it's normally resolved by the labor force survey aligning with the payrolls, not the other way around. That's a highly technical explanation.
Everybody's asleep now.
Like, what the hell? Let's get on to something else.
Back to, from an investment perspective, we don't look at the unemployment rate. Like, that's like mainstream media numbers. We're more interested in the jobs that are being created. Is it because?
But what do you mean by that? Because that's not
because the unemployment rate can be affected by population as well as say you're always looking for a job. Did you get a job? No, I don't have a job. Are you looking for a job? Yes, you're included. All of a sudden they call you and say, "Did you get a job? No. Are you still looking for a job? No, I've given up." You're now out of the labor force.
Yep.
Well, out of participation.
Yeah, it's a positive. So from the investment perspective, we're always more interested in
that raw number,
in the monthly
I
number.
think that's wrong because let me tell you this: the Bank of Canada did a great analysis of all the different factors that influence inflation, and the number one correlating variable is unemployment in the under 24 male cohort.
What's the rationale?
Yeah, but wait a second. That's because they rank correlations, right? I mean, we're getting really into the weeds here. So
no, but if you think about causality, because they tend to be overrepresented in some of the goods producing sectors, manufacturing, construction, etc. And when you get an excess of labor in those areas, it tends to drive a lot of the inflation lower. So it's negatively correlated, right? So if you get a rising unemployment rate in the U24 male cohort, it is the number one predictor of inflation. So you
inflation
should be
rising,
watching.
you mean, or declining?
Well, if you get rising unemployment,
you're
gonna get falling inflation.
Yeah, I think that's
so my point is
correlation, not causation.
Yeah.
I disagree with that completely, dude.
Nerd
fight.
You don't think? Okay, so if you're a manufacturer, think about the input into manufacturing costs, into construction costs, if labor, which is a major input, if all of a sudden you can attract talent at a much cheaper rate, you don't think that's going to influence the end cost of the goods produced?
For the sake of this being your house, I agree with you. The drinks are nice, the food is nice. But you know what's interesting? A lot of different factors go into both of these variables in the conversation. And maybe they're correlated or a causation, but if you're laying people off, it means the economy is slowing.
Yep.
You know, if you're a commie, you're going to keep your price the same. If you are a capitalist, you're going to adjust your price, try to become more efficient. So it does go in those directions. But so far, we've established the private sector employment has been deteriorating. We've also discussed how the political side, people want the monetary policy become more accommodating, and the population growth story is not as powerful as what you suggested. Are there other factors that are coming up now to continue with this sort of declining trend?
I mean,
What do you see, Rich?
I mean, we have to talk. I mean, we can't avoid sort of the tariff uncertainty. I mean, I've sort of been maybe not as I've been too sanguine on that topic. I think, you know, from a political standpoint, let's not get into that. I think it's quite a red herring. But we're seeing in the data, in the export data, which came out, I think, a couple of days ago, it was really. We might have talked about it last week. It was really quite bad. I think that sort of reflects overall slowing global growth. And also I think it reflects weaker oil prices, which is such a huge component of our exports. And that has sort of a compounding effect. You know, less growth means less oil demand, but also lower oil prices. You know, that sort of reverberates into that. I don't know. I mean, the thing back to the Bank of Canada, I mean, the Bank of Canada is a single mandate central bank, you know.
In theory, Rich.
Well,
yes. Yes.
Well,
So
they
you're
don't
saying that, no, of course we both know that's not true.
But they have two mandates. It's inflation and housing, right? Steve, in your world though, like what are you seeing now? What's happening?
I mean,
That would collaborate this version, what we have over here.
I mean, I think that housing, you know, to Ben's comments, like, I think housing is incredibly weak. I think that, you know, you look at the data supports, you know, 20 to 30 year lows in Canada's two largest housing markets outside of the pandemic. I'm seeing it anecdotally. I think it's a very illiquid market in many circumstances where, like, I'll give you an example. Let's just say you price a condo. Let's just say a condo in a building, generic high rise, sold for, you know, 800,000 6 months ago. And so you say, okay, well, you know, that one sold for 800. So, you know what? Let's price you at 799 with the expectation that you might sell for 775. You price it at 799, you get no bid for 4 weeks, so you reduce the price to 769. You get no bids for another 3 weeks. You reduce it to 749, and you're still getting no activity. And so, like, it's kind of like, well, like, where's the bid? Like, how much lower does this thing need to go to get the bid? And so, like, I think that's what we're seeing, like, in a lot of the market. Now, don't get me wrong, this is not like the entire market. I think there's pockets of the market that are performing totally fine.
But is the lower bid coming from a lack of confidence on the buyer? And
I just think there's a lot of supply. There's little confidence in the buyer. There's like, well, what's the urgency to pull the trigger today? Why not just wait a little bit longer? And I think, you know, obviously it's working out for them today. To Ben's comments, I've read a lot of your research, is my view, and at least what I'm seeing over the last couple of weeks anyways, is that sales activity is picking up. But it's picking up off of 20-year lows. So, like, any increase feels material. But I still think the numbers are going to, you know, underperform long-term averages. But there's really nowhere else to go but up. I mean, the floor is so low that, like,
I have a question though. Is Doug Ford right?
That they need lower rates?
I mean, what?
No. So the condo market's a different animal, and what my understanding is what he was referring to.
I think it's outrageous that he made that statement.
It's
well, we
insane.
made the same statement.
But we're not public figures. We're not politicians.
Hey, we're very important public figures, everyone. Come on, we're here
Sorry,
today.
Ben.
No, I was going to say, I think my understanding is he was referring to the pre-construction market, and it doesn't matter how low rates are.
Okay, that's my.
You're not going to save that because you're so deeply underwater.
it's toast. Yeah.
Okay, cool.
Yeah.
Like, I'm getting like, you know, I'm obviously, you know, connected in the space, and, you know, people will talk to me off the record, and, like, the conversations that I'm having is the pre-construction market. It's on life support. Like, you have very large developers that, like, large, well capitalized, that have been in the business for 30 plus years that can't get off the ground. And they're like, what do we do? Like, and it's a conversation of, again, just launching. Sometimes it's trying to actually, today is in many circumstances actually launching product to keep the lights on. You have people that are employed in these companies that, you know, is good talent, and you need to retain that talent. And if you have no high rises to build for them, you got to lay them off. So they'd rather run a project and make no money, or even a small loss in many circumstances, to build this project to keep people employed. And that's what's happening. And, you know, we actually had a really good conversation with a large development
Broker.
manager at one of our meetups, saying that, listen, like, we're doing that exact thing that I just said. We're doing this thing, and we're actually going to the construction companies as well that normally would tender the costs, and we're saying, this is our scenario. Do you guys want to follow suit? And they're saying the same thing. They're saying, well, yeah, we're a materials company. We need to keep our large operation functional. We will drastically reduce the costs in order to make these projects even a little bit viable.
Yeah, so it's always interesting, right? Because that was the narrative when the market was going up, is you could not build it any cheaper because of the cost of labor, because of the taxes, everything else. This was the floor price. And what you actually find is, as the market softens, that floor price falls because your input costs fall, your land price fall. And the other thing we're starting to see that's actually very encouraging is you're starting to see some like municipalities here in Ontario that are dramatically slashing their development fees, because they're realizing that, you know, 100% of zero is not a lot. But if you cut your development fees by 50%, you're going to get something. Right?
Loonie Hour math, right?
Right, Loonie Hour math.
Yeah,
but, you know, but that is what's really, you're seeing that floor price fall because of that exact. I'm hearing the exact same thing, Steve.
Yeah, 100%. So, I mean, that's kind of the situation of the pre-construction market. You know, we also had a conversation, Rich, last night, just on the state of, you know, so we talked about tariffs, but the Ontario manufacturing sector, which is kind of like in the sort of the eye of the storm, and they're having to sort of retool all these manufacturing warehouses and sites, that there's just going to be mass layoffs there that are really inevitable, because a lot of these are just dated manufacturing facilities. And so I'm kind of wondering, like, how it works with all these tariffs, and if you've got an opinion on that,
well,
Ben.
Did you guys see? So I think it was a National Bank chart. It was a really good one. They ranked PMI across all countries in the world. So PMI,
producers,
my favorite, thing in the world, diffusion index.
Yeah, but it's a measure of the strength of the manufacturing sector in every country. And Canada was dead last. Yeah, we are the weakest, and that kind of makes sense.
What was the latest number?
46 or something like that, in that ballpark. So sub 50 means your manufacturing sector is contracting, and it can be contracting across
How many months
measures.
has it been sub 50 now, or was that the first?
Wow, I don't know, but it's been a while.
It's been a few months.
But just you have to be careful, because part of that diffusion index is an amalgam of, you know, different. It's an amalgam of different pieces. So there's a sentiment component, there's an output component, there's an employment component, there's a pricing component, there's an output price component, there's a margin component. And so for Canada to have a 46 piece, it means it's negative sort of across the board, right? So that's it's a really, really bad sign.
It's a low number, because if you read the ISM so the Institute of Supply Management, that's the American version of the PMI, basically. And if you actually read the definition, normal economic activity has a reading between 48 and 52.
That's right.
So even though it's below 50, you're thinking, oh, it's horrible. But to go from down to 46, that's a big move.
Yeah.
That's a big move.
And if you want to get even more inside baseball, it's relative to trend, right? So your trend is normally going up. And so if you're below that 50, you can still be rising, but that trend, you know what I mean? As long as you're below that trend, in theory, you could still be rising. But anyway, the real point is that Canada is that manufacturing sector combined with the construction sector, which will fall from the housing, is inevitably going to bleed into the service sector, which we're seeing. It's probably centered in Ontario, the weakness. I don't know. I mean, it's just a continuation of the trend we've talked about.
Well, Toronto just hit a 9% unemployment.
Yeah, that's back to the LFS.
But you know,
remarkable.
equities are back to highs again. The Canadian dollar is strong.
Rates, good.
You know, they're a bit higher than they used to.
And consumer confidence. I mean, the one I track, which is maybe the less, not as good one, but it's the one. It's snapped back to pre-election lows. I mean, it's just, I think it's a lot of muddled version, and maybe I'm coming around to Ben's view that it's sort of not as bad as a lot of us are thinking. Although I think a lot of time strategists are usually quite early to these kinds of things as well. But anyway.
I may be early, but I am not wrong.
Sorry to interrupt the show. Just wanted to give a quick plug to our friend Ben Rabidoux and his product Edge Analytics. Edge Analytics is an excellent research service covering major metro housing markets and credit trends. The service is catered towards realtors, mortgage brokers, developers. I personally use it myself and highly recommend it. Tons of data, which allows you to keep on top of the market. There's a special discount code for Loonie Hour listeners in the show notes below.
Beachy is Canada's destination for premium and hard-to-find cycling brands like Factor, Favreau, and Café du Cycle, who happen to make this really cool shirt. Whether you ride road, gravel, or mountain bikes, Beachy has everything you need to make your riding season better. With fast, free shipping over $150, flexible financing options, expert customer service, Beachy makes getting the best cycling gear in Canada easy and worry-free. Plus, when you use the code LoonieHour10, you get 10% off your next order. And if you're ever in Vancouver, swing by their retail store in Adanac and you get a free espresso on the house. Just tell them we sent you.
So Ben, what happens with I'm always kind of like trying to be forward looking here. So I'm in total agreement with you that the pre-construction market, there's no reviving it. You can drop rates 100 basis points tomorrow. It's not going to change
Doesn't matter.
the direction
Sorry,
of the pre-construction
Doug.
market. Yeah, sorry, Doug. What happens to all these construction workers? Because I think, it's funny, right? I remember Christopher Freeland being like, we're bringing in, all these people, 1 million immigrants a year because we need more construction workers. Ironically, it was the share of those population growth that were going into the construction sector was actually declining.
Sure.
But I'm kind of wondering
They're all
now,
Uber drivers and Tim Hortons workers.
right? So, but I'm wondering, if you're in the construction space and you're like, okay, well, I think long term, I think we can agree we're going to need to build more housing.
Mhm.
But there's no housing starts getting built. There's nothing. Do you worry about these people then becoming unemployed? Let's say, I don't know, a framer, for example, or a plumber that works on high-rising projects. Where do they go?
They're going to learn to code.
Well,
Sorry.
yeah. I mean, are they going to? I mean, it's
I
pretty.
do worry about that. Yeah.
Yeah.
So right now, what's holding up construction employment, if you look at the starts date, is actually the rental segment. Which, if you want to talk about a program that has been a resounding success on the part of the government, it has been this MLI Select program from CMHC, which has been what's provided the credit guarantee for the lenders to advance financing on a lot of these rental projects. And it's been remarkable. We've got 160,000 or so apartment units under construction across the country. It's over half of the starts now, which is an unprecedented high. So, I'm not, it's not clear to me how bad the construction employment situation is going to get. It's going to go down, I think, because you're going to have a lot of condos completing this year and that number is going to fall. But it's too soon to tell. What I worry about is over the longer term, I think you can make the argument that we're not building enough single family. Not for the next year or two, but beyond that, I do wonder if we're not building a bit of a deficit there. And even the condo market come kind of 2030 is going to have arguably you'll be undersupplied there too.
So just on the housing starts data, there was a really good anecdote, and I've always said, I think when I look at the housing starts data, you're 1 month it will tick up, and all the politicians see housing starts are up, and I'm like, man, this is not reflective at all of what's happening on the ground.
Yeah.
So there was a really good example from a large developer in Vancouver, and he's put it out on LinkedIn, and I had to clip it. And so he says, we get obviously surveyed by CMHC. So he says, I'll give you an example of a recent project where in 2022 they had a pre-sale launch. 2023 they started construction. In 2025, it was registered as a housing start.
Correct.
The decision
Wait,
to move
sorry, can you repeat that?
This is really important. So with a multifamily start, it's not registered as a start until it's back above grade.
What's back above grade mean?
So it's no longer a hole in the ground. The foundation's poured. You're now operating back above grade.
Oh, literally in the air, quote unquote.
Yeah.
Oh, wow.
So in other words, you can be a hole in the ground for 18 months before you're considered a start.
Oh,
which is why it lagged. Okay, so that's
So what's happening now then with the data?
So let me recap this for you. So again, 2022 pre-sale launch. They launched pre-sales.
Yeah.
We got 2022, pretty hot market, right?
Yeah.
So we're gonna launch pre-sales, great market. Let's sell these units. 2023 construction starts. 2025 we're now considered a housing start. But the decision to move forward on this project was based on economic conditions in 2022. yet CMHC counted as a start in 2025. So like, you know, it was a 24 to 36 month trailing indicator of
Big time.
right.
So
So,
this
the
is why
supply is going to surge dramatically. Is
No.
that what-
no, what we're saying,
No, so what you're seeing
What am I not
today,
getting?
It's a lagging indicator.
that's
It's
the
a
word.
lag.
It's
Yeah,
the
that's my
lagging
point.
indicator.
Yeah.
Keith, what I'm saying is the housing starts basically effectively are still showing like they're rolling off, but they're still relatively elevated. They're rolling off, but they're still relatively. But like in real terms, I think if you look at it today, like nobody can sell like 30-year lows in pre-construction units in the GTA, in
I'm with you now.
Vancouver.
Okay.
You know,
And that'll be the housing starts next year.
Or in 36 months or whatever.
Well, it won't take quite
Oh,
that
excuse me,
long.
but
but-
excuse me, but
18 to 24 months.
Yeah.
is-
That's
So
what I
I've got a
meant.
chart where we track new condo sales versus condo starts, and they lag by about 18 months.
Okay.
So condo starts have started to roll over. But if you look at where new condo sales are, they've got to fall dramatically in places like Toronto. So one of the things to think about is, you know, we've got this glut of condos right now. We're going to have probably another record year for condo completions this year. They're all underwater. It's a real problem. But if you look at the pre-construction condo market, we've sold less than 4,000 units in the past 12 months. So for context, in 2022, we sold like almost 40,000. So we're talking a 90% reduction. Now you roll this forward and come kind of 2030, you're going to have a dramatic reduction in new supply coming online, and there will be a condo shortage. Everything is cyclical, man. Everything is
Even the
cyclical.
dog crate condo will be a shortage?
I would say yes.
But Ben,
I would say yes.
That's like like going from 40,000
Yep.
to 4,000. That's like an extinction level event. Like, I mean, unless you're like a really
I thought we just had that 2 months ago.
well, I mean, if you're like a well-capitalized developer, sure, you might get through it. But there's a lot of people that are obviously like built on leverage. I just like that. I don't know how that industry actually is.
So let's bring this next then over to the credit world.
Yeah.
Because if all this is developing and, you know, one person sees the housing market as, you know, a place where you hang out and live and stuff. Other people, more exciting people, yeah, huh? I see this debt.
Yeah.
And if job losses are increasing, people are dropping out of the workforce, the population isn't growing as fast.
Zero productivity growth.
You know, the bid to buy a house or a condo is not as strong as it used to be. That's going to show up in credit at some point, right? So Ben, what are you seeing now in that world? Is it good, bad?
You know, it's interesting. So the banks just reported, and I would say there's a couple trends that are interesting. You're starting to see a real variation across the individual banks in terms of their performance of their like domestic retail and commercial loan book. So there's a couple notable outliers that are seeing like considerable deterioration. But broadly, I would say the trend is on the consumer or what they call the retail side, you're seeing a continued grind higher in delinquencies, but it's not what you'd characterize as like an implosion or a, you know, detonation of a debt bomb or something. It's just a slow grind higher.
So define for everyone what a delinquency is in the
You're
debt world.
behind on your payments by
Is it
90
3
days
months?
or more. Yeah.
Yeah, so
Yeah.
it's 3 months.
Depending on the loan type, they have different definitions, but generally 90 days or more. Now, what is interesting though is if you look at the commercial loan book, there was a very significant increase in impaired loans last quarter, and that's actually consistent with what we're seeing in like the insolvency data, where business insolvencies are still running almost twice of what kind of pre-COVID levels were, where the consumer side is only just now kind of back to average. So I would actually argue that what you're seeing now is a deterioration in business conditions, but you roll that forward and that'll likely show up on the consumer side. Because if a business is hurting, eventually they're going to start.
So then why?
They lay people
They lay
off.
people
So
off.
then why are you so relaxed about unemployment? I mean,
I'm not.
oh, okay. Because it just seemed when we were talking, sorry, maybe I misinterpreted, but when we were first talking about the labor market, you're just like, well, you know, unemployment's up, but I'm not so, maybe again, I misinterpreted, but so, because to me, it just signals that it's like the leading indicator for unemployment rates and further deterioration in
Yeah,
growth.
just to be clear. So I think maybe what where I wasn't clear is when I said I think that Stats Canada in their labor force survey modeling, they're overestimating population growth, which means they might be also overestimating the unemployment rate.
Okay, but the direction of
still
travel,
directionally,
right? Excuse
it's
me.
going
Okay,
up.
I understand.
It's just I don't know if it's
I
actually
understand.
7% or whatever it is, right?
Okay.
So look, I think that the trend is pretty clear that the labor market's going to deteriorate from here, and
but back
credit's
to-
going to get softer.
Yeah, back to credit. I mean, do you see how does that get priced in? Because spreads seem so, the bond market's not dumb. I mean, sometimes they're dumb, but most of the time they're not dumb. I mean, we see spreads are still so tight.
See, I disagree. I think the bond market is the dumbest market in the world right now.
now.
Totally. I think people know my view
Yeah.
on where it's, in my view.
Remember the zero coupon 100-year?
Yeah, that was so bananas.
100-year bonds.
Yeah.
Yeah.
I mean,
Yeah,
if
but
you're,
I think Apple has a 50-year issuance, I think.
yeah, it's down 40%.
Yeah, it's trading like in like 60 cents.
Yeah, but you guys are talking
that's
about
duration, though.
but that's U.S. I think that it's hard to. I don't know how much do you track Canadian spreads?
The problem is it's not that liquid. The corporate bond.
That's my point. So I think you're getting the signals off the U.S. side.
Yeah,
absolutely.
So I don't know if that's true here in Canada.
the corporate credit spread that I look at for investment grade, which is sort of the higher quality product, and the high grade, which used to be called junk, which I think is a more.
So now, actually, I was at an event a few days back, and the strategist was with J.P. Morgan. Yeah, Jamie Dimon. Remember we had that story last week,
Mm-hmm.
and he actually broke down high yield between high yield and low high yield.
Oh God.
And I said, "This is awesome."
You know when you're cutting, you're splitting the biscuit like that. You know you're in trouble.
Yeah, absolutely.
But anyway, I was just saying, my point is just simply that the spreads are low, and maybe the counter argument is that they're just not traded that much, so you don't really know
I
what's
think
going on.
there's a lot of optimism right now that Canada could, and this is going to push back on some of the narrative here, but I'm somewhat sympathetic to it. The idea that, look, whether you like it from the long-term perspective or not, deficits are stimulatory, right? They're stimulus in the short term. We're going to see big deficit
We
spending.
talked about this, which is like this fiscal bazooka that
it's coming.
So I think one of the things that's getting priced into the Canadian market,
I can see it coming. It's coming right there.
we don't even have a budget.
We don't even have a budget.
No,
I can see
doesn't
Saskatchewan from here.
No, but look at what he said, right? Like just look. He
Whatever it takes.
Effectively, like we just got an announcement that we're going to have 2% of GDP in defense spending.
Yeehaw.
You're going to have I think you're going to have big infrastructure spending.
That's a
Big
capital item.
windmills. Really big windmills.
No, I don't. Maybe, but I don't. I think he's going to try to get traditional energy pipelines. and
Yeah,
stuff built.
right. That's a bet
Well,
worth having. That's a twinkie.
No.
Well,
bet.
but listen, I'm saying that's what I think is being priced into the
Oh, okay,
optimism
yeah.
around Canada. Is there's a recognition that he is pro stimulus, pro deficit, and you've got to be at the margins more bullish on the short term in Canada if you're going to
See, I agree because not only will the Canadians come with a financial bazooka, I mean the Yanks have just tried to do it.
They're never going to run a
big-
budget
but
surplus
they're-
ever
yeah.
again.
big
No,
beautiful
no,
bill.
no,
Brits
but
are
no,
gonna
that's
do it.
not fair though, man. They're running a 7% deficit.
Yeah.
We're running a 2%. You're going to tell me we can't run that up to 3 or 4 without issues? Like, come on.
Oh, well,
It's party
my
on.
view is that everyone is going in the same direction at the
Yeah.
same time. It's a relative move. So going from like this much to this much, it's the same as going from this much to that much. It's the same
Yeah,
amount.
okay, but let me ask you this: why did
I'm
Germany?
not finished my
Oh,
point.
I'm sorry. I'm sorry.
I know you're excited
I'm
for the
sorry.
brisket and everything coming up. And it's going to be a nice brisket. I can see a world where, Steve, you said financial bazooka. I think everyone is going to do it at the same time. So you're going to have all this. So it's going to be like 21 all over again. We get all this fiscal policy stimulus coming into the world, and Doug Ford will be right, and they'll get rate cuts at the same time. And then we're going to have a 1 or 2 year period where, okay, we sort that out. And then for financial markets, you're into 22 all over again, which wasn't a great year. It was pretty
Yeah,
tough.
that's plausible. That's plausible. I guess my point is just if you look at what's happened with Germany's stock market.
Yeah.
All of that is related to
It's one of the
them
best
removing-
performing markets in the world.
And
just
why?
For people
Why?
who don't,
That's-
they're pricing in a lot of stimulus, and also
Correct.
there's a valuation argument, and there's an
Sure.
earnings multiplier effect. And
Sure. But really, it started with them removing the constraints around deficit spending.
Yeah.
So anybody who does not think that deficit spending gooses the economy and gooses the stock market, you're not paying attention.
That's what Steve's been making that point for a month, and over here we've been sort of ignoring it. I mean, that's what a month ago Steve said, well, isn't all this stimulus isn't all this stimulus effectively liquidity, and isn't this liquidity good for risk assets ultimately?
Yeah.
Not that the things are worth, not that the assets are worth more, is that the money or the thing that you denominated is worth less.
Yeah.
I mean, that's
one way. I don't know. I mean, that's one way to try to arrive. I mean, obviously, Mark Carney's well in tune with what's going on.
Is he going to cut rates soon?
I mean, him and Tiff are probably drinking beers like we are right now. So
Yeah.
Yeah, it's on the government dime.
But like with this whole conversation about market, I have a bit of a different view on what's going to drive markets. If you're getting job losses, it's less people working, less people contributing to their defined contribution plan, their defined benefit plan every 2 weeks or once a month. That means these funds are selling money or the flow is getting slower. That creates a risk-off experience.
fair
It
enough.
happens. If, however, the corporate sector, they start to see, hey, fiscal stimulus is coming. I'm not going to lay off as many people or none. Maybe I'll start hiring again. Then that could, create this environment you're looking at. But from my perspective, remember the key driver of financial markets, Rich, cover your ears.
Okay.
There you go. It's not valuations.
No, I don't think it's
Valuation is
valuations.
the end result, the net result.
You meant to say earnings.
Oh, sorry. Yeah, earnings. Well, no, valuation as well.
Anyway,
It's the result of
Right.
where markets are. And we've just been in this 15-year period where the hose has been on full blast. And when it couldn't go anymore, they brought in another hose to go on full blast. And that's why we're in this
But
world where everyone thinks everything should always go up. But we need something to cleanse the system.
I don't disagree with you with the cleansing system. I think that's well documented. But I think Ben makes a good point, which is like you've had countries that have been relatively restrained fiscally. Close your ears, Keith. The Canadian government has not been running a 7% budget deficit. And if they go to 4, regardless of whether or not we think that's a sensible thing for working class, inflation, the productivity growth of Canada, whether we think that we already think there's too much involvement in government. The argument is not an unreasonable one, which is if you just start printing again.
Well, it depends on what the stimulus is.
Weapons,
right? If you're
bombs and guns,
if you're like quadrupling the employees at the pick your
CRA.
favorite, no, they can come after you. Don't say that one.
Okay.
Someone else. Then that's not productive.
No, I
It
agree.
is the productivity.
Yeah.
But if it is going into the capital account, then maybe it will.
Yeah, but I
can
think
be
that's an
positive
argument over the
that way.
longer term.
Yeah.
Over the near term, it doesn't matter.
Yeah, fair enough.
It doesn't matter, man. If they're just going to mail checks, like your model about rising unemployment being risk off, you would have lost your shirt in 2020, right? Because you had 20% unemployment rate and the stock market was ripping. Why? Because we had
I
enormous.
say it's
stimulus.
irrelevant.
That I agree
unemployment
with you. I
rate.
agree with you. The
I don't think you
unemployment
ever
rate.
make an investment decision based on the unemployment rate.
He's coming
I
around.
agree.
Unless
around.
you're following the CBC, of course, right? Because that's the sell
Yeah.
rate.
Yeah.
Yeah.
No, I think that's so. Just getting back to put a bow on it, I think that when we talk about what seems to be getting priced in here in Canada, I would argue it's a recognition that we're probably going to see more stimulus down the pipeline. And regardless of what form it takes, when you put money in the economy, it just gooses the economy, at least in the short term.
So at that point, it seems CIBC's chief economist, is it Victor Dodig? Dodig?
I think that's the CEO, isn't it?
Yeah. Anyways, he just came out, so he's stepping outside of the bank. He's leaving the bank, I think, in the fall. So he's kind of leaving some parting words as he heads out the door. But he basically said that Canada's in, quote, suspended animation with all the new major investments are largely on hold. Canada's, of course, in this productivity crisis. And so he says the economy needs, quote, the salve of lower interest rates, pro-growth policies, and more certainty on policy. To which he added that 2 things is he believes Canada's economy, due to Donald Trump's big, beautiful bill, Canada has to get more competitive on taxes. So
Agreed.
it will take a while to rebuild Canada's reputation as a great place to invest. This is going to take a decade or a decade and a half, describing the challenge as similar to putting the country on war footing. I think if we don't get our game together, it will emerge into a crisis, which is similar to like Carolyn Rogers talking about like break the glass, productivity crisis.
Yep. But can we comment on that? Because to me, the productivity crisis, it's crazy to me that they're pushing for productivity, but yet every business, the moment that they sense any tightness in the labor market, wants to bring in a ton of international temporary workers.
Yeah.
How about the answer is you invest in
robots.
productivity? Like, what are we talking about? here?
Hallelujah, of
Right?
course.
So, like, let's stop giving businesses an out to not become more productive. Like, so if the government's listening, rein that in and encourage investment to
course.
get that
It's a
product.
substitution effect. It's clear.
100%.
So how would they encourage then that?
You say, look, you don't look, if you're a business and you're trying to figure out how to make more widgets with your dollars, you have two options. You can either complain to the government that you can't hire enough, people at minimum wage, and government says, okay, no problem, bring in a bunch of kids from wherever, right? Or the government says, tough luck, figure it out. And you got to put your thinking cap on and you find ways to become more productive, which is what the US has been doing for years.
Like invest in CapEx.
Correct. You figure it out, man. So whether that's, automation, whatever that looks like, if you tell businesses, figure your shit out, they're pretty good at doing that if you don't give them the easy out of just hire a bunch of more cheap labor.
Yeah. I mean, you're preaching you're preaching to the apostle here. I've been saying that for years and years and years. The problem is, we're getting into the politics thing, and I want to try to stay away from it. But that is fundamentally one of the biggest issues in Canada. Is that there's substitution effect between cheap labor and CapEx, and our CapEx, especially if you exclude residential structures, is absolutely abysmal. Mm-hmm. And people will say, "Oh, it's because of the oil and stuff." Yes, people will say it's the mining. Yes, but it's also it's basically everything else. It's non-residential structures and equipment and machinery, including the mining sector, including the oil. We're going to talk about how David Eby hates poor people. And it's like all that. And if they need to stop discouraging CapEx. And it's just wild. They just don't get it.
So today you're in a situation where instead of obviously investing in productivity and capex, etc., you're just in a scenario where you bring in a whole bunch of immigrants to drive wages lower, drive housing rents higher for landlords, and obviously the Canadian youth today feel disenfranchised, right? Where they're like, we talk to people all the time in the Loonie Hour, like tons of people reach out and they're like, I'm young. I don't know what to do. Should I leave Canada? Like, there's no hope for me. I can't own a home. I might be able to get a job, but it's not going to be very high paying. What is the solution here? And so people are obviously, again, becoming disenfranchised. CIBC's Dodig went on in that interview to say that he thinks when it comes to young home buyers, Ben, I'm curious your thoughts. He believes the government should allow them to earn as much as $75,000 before they pay taxes, so long as they put it into a tax savings account to help pay for a future home. He says, we need to give young Canadians hope. Well, I'm saying, how do you bridge that gap? You know what I mean? I think
look, there's no silver bullet for affordability. Yeah. So it's got to be a bunch of targeted measures. You could put that on the table as a potential one. I think before you go that route, there's some pretty low-hanging fruit out there. Let's get our immigration house in order.
Yeah.
Let's try to incentivize municipalities to not tax the shit out of new housing. Which just raises the price of it impedes development. There's a lot of low-hanging fruit that I'd prefer before we go that route, but it's not the craziest thing I've heard.
But it's interesting though, right? If you have a massive cohort of youth, and if you can't actually set your roots down into housing, what actually ties you to the country?
Nothing.
Other than okay, you might have some family, and you're like, I don't want to leave my family.
I speak with 1 to 3 families a week that are considering leaving the country. They've given up hope, right? That's what's happening.
We spoke to a couple last night. We're not going to say their name. They're a beautiful couple. They're both educated. They had great teeth. They have good jobs.
Random comment. Whoever you're listening.
They were lovely. No, but
the world are rich.
All jokes aside, they were literally one of the first questions they said was, thanks for. They said, where should we go? What should we do? Where should we leave? And I'm like, what do you guys do? One's an accountant, the other one's a dentist or whatever. What?
Well, that makes sense why they have such good teeth. He must be a good dentist.
No, but I mean,
apprentice.
My
this
point
is clearly unscripted tonight. For some reason, that's where it's.
You guys are harping on the wrong part of that story, which is, we're losing. We have the unfortunate chance to lose these really great contributing members of society, and it's just. But I really love the idea of not taxing income or taxing income way less. The idea that you have to pay 50% of your income over 100 and whatever 50,000, or I can't remember the number now, is a crazy.
Yeah, but it's not only that; it's on the business investment side too, or as a corporation. So again, if you have the United States, which is your neighbor to the south, saying, "Listen, we're going to deregulate, we're going to lower taxes for all these businesses." How do you compete?
You don't. You lose.
And so that's what I'm saying. It's I think their hand is hopefully going to be forced.
See, I think you're all bananas. Okay.
Well, I mean, I don't think they're going to, Keith, to your point, they're probably not going to do
So
anything.
first of all, if the couple they moved to Britain, they would have the best teeth in the whole country. So I think, everyone assumes there's always, you can put a bit of duct tape on it, change something this, add another tax credit here or there, spend a bit more, and we keep this party going. My view is different. People that know me, we're literally at the end of an 80-year cycle and a 40-year cycle. Governments are running deficits. The deficits are bigger at the end of the year than at the beginning of the year. Rates are higher now than they were when they first planned the budget. Older debt that's rolling over has get rolled over at a higher rate than before. The economy is grinding lower, so there's less tax revenue coming in. Rich, you shared before that for Ottawa, the amount of tax revenues allocated to the interest expense is roughly equal to what they're reallocating for healthcare.
Yeah, and rising.
So the amount of the interest expense on federal debt, not including provincial, this is rising at an exponential rate. So it's not additive or linear. It's going like this. So the people who are developing policy right now, they know this stuff as well. I hope they do, because their response is what you do if you want to keep it going. The only way out of this mess is to try to create growth that's faster than this exponential increase of interest expense. And there's only two ways. They have two levers.
Do that again.
You want to guess the two levers? No. You like that dance, right? But they can spend more, of course, that's the fiscal lever, and they can cut rates.
Yay, we love cutting rates.
That's what they're going to do. And, we just had a decade with rates at zero. Canada, America, Britain. Do your accent? You're British.
Got out, governor.
But everywhere. And it still didn't work. Debt still has accelerated. So, I keep going back. It's going to be a cleansing of the system. And it won't be the stock market. It's going to be the bond market. And central banks are going to bail out the government bond market, which comes through the credit world, and everything else. So that's where I suspect we're going.
You're making a good argument for hard assets.
Yeah, absolutely. Yeah. So in that, you're looking, okay, how do I protect my money? Do I buy a nice place in St. Catharines and live on the lake? Is there a lake in St. Catharines?
Apparently.
There's a lake behind us.
Apparently behind us.
Don't tell Keith.
What is your favorite Ontario town? Ajax, isn't it?
Yeah, Ajax.
Ajax,
I'm very popular in Ajax.
But that's why people are having these conversations. And what's the best way to, protect your family's wealth and everything?
But
they should be having it. Absolutely.
The cherry on top, which you forgot to take, and it's in Canada, our federal tax take as a percentage of GDP is at a 22-year high. Say
that again?
Our federal tax take as a percentage of GDP is at a 22-year high. So a 23-year high or whatever it is.
So there's really any more room to go?
Really,
yeah, and our this is other stuff we've talked about, but public sector productivity is at a 10-year low, and then the public sector employment as a share of total employment is as an ex-COVID 25-year high.
Yep.
So this is the problem. So all this. I mean, this is where I'm really worried about these deficits. And yes, I understand that there may be stimulative for assets, fine. But where I just have zero faith that it will help Canada, in inverted commas, properly help Canada, is that they're just going to stuff the coffers of people who are already in those businesses. I don't think they're going to attract.
Possible. Yeah, no, I do worry that too, Rich. Look, there's an argument to be made that perhaps if it ends up being into productive assets, that whatever gets traditional energy to new markets, whatever that might be, in the long term it'll be beneficial. But something you said, Keith, that I think is interesting, and I'd love your take on this. So a couple of years ago, the government of Canada very quietly suspended the issuance of real return bonds.
Of the what?
Real return bonds.
Yeah, they did.
Inflation adjusted.
Inflation
for people
protection for kind of retirees and people that want fixed income, which I thought was a big tell at the time. I think it gives you a sense of what the government's headspace is, where they're at with their headspace, right? Is that what you think the end game here is that they're just going to have to run inflation hot, keep rates lower, financial repression, and you kind of inflate away the value of the debt, and that's why they don't want to be issuing these?
I think you're giving them way too much credit.
You think so?
Yeah,
Why would they cancel something that's so popular then?
So one of my first jobs, I was on the pension custodial side.
1962.
Yeah. Back in
Just after the Great
1875, we had
That's
a
right.
wagon hooked up going across Saskatchewan. But you had to price these things. I don't know why they, with hindsight, you might say, well, maybe they had that vision. I just don't have, put it this way. If I had enough faith that government knew what to do to resolve everything where we're going, they would have figured it out already. And they haven't.
There was no pressure. Interest rates focus the mind.
So we just have a whole bunch of new MPs that arrived in Ottawa.
No, they're all the same.
That's fair enough.
Except for Tim Hodgson or
But
whatever.
the people that are making decisions, they're all brand new to Ottawa. They haven't been there before.
Kind of, but anyways.
Well, that's not true either.
Yeah, exactly.
But that's my point. Like if they're going to do something to make a difference, they can't inflate the debt away. Like that just doesn't work. They tried to do that for so long. Like it's getting a bit cool here right now. You know what I would do to warm things up? I would get the Income Tax Act. I plop it right here and light this mother on fire. Because you keep making adjustments to it. Like it's as a country, you can't be the first one to rip the Band-Aid off because you're going to get mullered. Like you're going to get just shut down in the investment world with it. But that's what has to happen. I know earlier, Steve, you were talking about, hey, any ideas to talk about tonight? And I said, the Brits. I'm back to the Brits again.
Oh, yeah.
Right? And we're saying, well, it's a Canadian patio story and everything. But the British jobs number that came out today, it was horrific.
Horrific, yeah.
Can you tell us
Oh,
what
I can't
it was?
remember. It was
I don't
like
remember the big
it was
number.
100,000, 105,000. But the key thing is about the trend and the key and how it relates to the budget deficit that they were already sort of getting in trouble for. And so I think it's now four quarters or 4 months in a row. I can't. Hopefully maybe we'll share the chart. But
It's about 200,000 less than pre-pandemic.
yeah.
Wow, really?
And
I'll follow that.
no one in Canada's talking about this.
Rich, is Rachel Reeves in the hot seat?
Yeah, so Rachel Reeves is the finance minister who from the UK is just so good and so sarcastic about naming things. So they called Mark Carney the unreliable boyfriend. People who don't know this, for years they called him the unreliable boyfriend when he was the governor of the Bank of England. And they call her Rachel from accounts because Rachel Reeves lied, not allegedly, lied about her job at the Bank of England. She said,
Yeah, but isn't that from a show called like Conks or something?
no, I think it's from the Office. So the British are brilliant at naming things. But the key thing really is, one, unemployment's falling. All the budget estimates that they had, maybe 6-7 months ago or whatever, are all falling apart. And they're, and because interest rates are rising and there's no real faith in that bond market and inflation's, an issue, their big plan to run budget deficits is all of a sudden start to get the squeeze. Because you can only run those huge budget deficits if people are willing to happily buy your debts, etc. Yeah. And so it's all very circular in a sense, but it also relates very much to what's going on in Canada. I think that's sort of your point.
And they could feel guilty about it when it's
oh God.
But my point is that it's not just Canada. Like everyone has this. So this financial bazooka, Steve, if it was just Canada that did it, we would get mullered for doing it. The bond market, the bond world would say, no. You're not going to do that. But if the Brits are also doing it and Germany.
They're all getting together at the lake on St. Catharines.
and
well, I think they're all getting together this week up in Alberta, aren't they?
Yeah, they got a plan.
G7 or G20 up there?
G7, I think.
G7?
Yeah.
Canada's number one for hosting it.
Canada has the lowest net debt in the G7.
But again, I can guarantee you behind the closed doors where these guys are hanging out, it's okay, how are we going to figure this out? And they're all agreeing, yeah, we're going to do the big deficits and they'll sell it another way. And
Build back better.
That's where we're headed. Yeah.
Build back better.
But I mean, I think the difference though is like Ben has made the case as how the music might keep going, and you're arguing about whether or not the music is going to stop, or in a sense, in a very real sense, I think you've argued that music has actually stopped, and we're maybe waiting for the bond market to sort of realize. And I think maybe you guys are both right in a way, because it's just about time horizon and when that's going to happen, when it's not going to happen.
Yeah, just to be clear, I actually agree a lot with what Keith's saying. I'm just articulating what may have accounted for some of the recent strength in the currency
I gotcha.
in the stock market. I think that's the perception out there, is there's kind of a potential Canada Renaissance. But I agree, like for sure, the big risk out there in macro land is what's happening at the long end of the yield curve in the U.S. and just this growing unease around these deficits. And to exactly Keith's point, who's going to buy these massive issuance coming down the pipeline? That's the big risk in the.
As long as employment is positive, there's money coming into the system that will buy the bonds. As soon as it turns negative, you can see yields like using the American. Where are we now? 4.5 again.
Yeah.
You know, call it that.
And the Canadian, and by the way, and the CBC was making fun of the long end of the yield curve, which I thought was very cute and probably a contrarian indicator. But the Canadian 30-year bond yield is just tracking the U.S. 30-year bond yield.
Yeah, it just doesn't matter as much here in Canada because in the U.S. their mortgage market's priced off the 30-year. So like they've got 7.5% mortgage rates. Like imagine that. Like we're here complaining about 4, and they got 7.5%. But for here, ours is primarily priced off the short end of the curve, which is not responding nearly as much as the long end. So we've been spared.
But that 5 year has been like relatively sticky. I think that's where like
around 3.
Again, obviously, we've chatted with this in the pod before, but I think where like most like home sellers, for example, got caught up was like heading into this year. Every single Globe and Mail article was like Bank of Canada is going to cut rates aggressively. Rates are going to come down, so housing prices must go up. And I think what we've seen is like there really hasn't been that much relief on the mortgage side for a lot of borrowers, which is to say that, the bank has cut rates, but like variable rates are still higher than fixed. And, your 5-year bond yield today is at just what, 2.95?
Yep. Unchanged for the year, basically.
Yeah. Unchanged for the year. Right. So like your fixed rates have come down modestly, but that's more of a compression game from, one lender in particular, one large bank trying to drive down all the other competitors. So what I'm hearing and seeing on the mortgage side is that a lot of these banks are actually going to start increasing rates just from a margin perspective. So, I don't know. I mean, we'll see, but I think, maybe 4.2, 4.3. It's not that much relief, really. I mean, I think a lot of people that, borrowed 4 years ago and renewing, still going to be a difficult adjustment, but.
Yeah, and it's interesting you mentioned that because the Bank of Canada had this piece out in the Financial Stability Review where they were French System Review. What's the FSR? Whatever the acronym is, where they look at the risk to the financial system. And they said, this is really interesting. They're like, the average payment increase at renewal is around 10%, 8 to 10%, they thought, which was way less than everyone feared.
Yeah, but that's because the average.
Right. You're right, brother. There's that saying, you never wade across a river that's 4 feet deep on average, because it's not the average that matters, right, Rich? It's the distribution.
It's the distribution. Yeah, so I didn't mean to interrupt you. It's just like when you look at that chart, the average hides the humongous changes.
Absolutely, because if you're renewing a 2-year loan, right, which is a third of the market, is sub kind of 5 years.
2 to 3, right?
Yep, 2 to 3. So if you're renewing today at a 2 or 3 year, you've got your payments are lower.
Yeah.
But that doesn't help the person who's renewing a 5-year term and is going to see a 35, 40+% increase in payments, right?
Yeah.
And that's not captured in that aggregate data, and that's not the right way to think about it.
Yeah, it's interesting. I don't know. I've had, interesting chat with the banker a couple of weeks ago, and I said, "Oh, like, what keeps you up at night?" And he didn't seem concerned at all about the not only the sort of the renewal wave, but also like the blanket appraisal stuff, which is like these banks are effectively financing pre-construction units at, say, 100% LTV. So I found that very interesting. I don't know. I mean, maybe that's just a banker.
No. I've had the same. Sorry to interrupt you, but I had the same conversation with a major risk officer, let's just call that, at a major bank, and he just when I was like, listen, what's going on with these delinquency rates, unemployment's rising, isn't there a risk in the housing market? And he just totally like fobbed me off. He's like, nope, we have the best underwriters in the world, or whatever it is,
the best spreadsheet ever.
Yeah, exactly. And I wonder like how you feel sort of.
Well, here's something related to that, and you guys will find this interesting. So in that same FSR report, they did a scenario analysis, like a stress test.
Yeah.
And they assume, get this, my numbers might be off slightly, but it was like a, 8% contraction in GDP. So like dramatic decline in GDP, and like a huge run up in the unemployment rate, and a 35% decline in house prices. And guess what the loss rates were assumed on residential mortgage?
Negative losses. It would go up.
Zero.
Yes.
Zero.
Really?
Zero. So, and their conclusion was, the banks are going to be fine.
Yeah.
We're like,
Who wrote that report?
It was the Bank of Canada.
Yeah, okay.
Like if you look across,
No
at all
way.
those,
Did
dude,
they
I'm
really?
not making this up. You look across at the assumed losses under that stress scenario, and the residential mortgage book was zero.
Yeah, so the squirmer was getting more squirmier.
No.
And then he just said, no,
You know, Ben,
The squirmer got the report and then took out his eraser and scratched it.
Ben, are you sure the Fortress guys didn't write that?
You would think they had, right?
So there's as we get closer to wrapping this up, Ben, I wanted to get your thoughts. So if anyone that's not familiar, there was a company called Fortress Real Estate Developments. Was it Jared Rathorn and Vince Petroza? Jawad. Anyways, they were just found guilty for criminal fraud charges. So basically, in 2020, the firm had reportedly raised $900 million from investors between 2008 and 2017 to finance various real estate projects, which of course many have ultimately failed. You were one of like the most vocal, loud voices, and early on, calling out this ultimately what it is a fraud. Can you kind of just like walk us through that story as we get kind of again closer to wrapping up, and just I thought it was so good that we had to kind of share it.
Yeah, absolutely. So I was sued by those guys for defamation, alleged defamation, back in 2015. They came on my radar in 2013. And it was very obvious immediately that the advertisements were just egregious in terms of how they were portraying the risk involved. And so I kind of questioned them a little bit on Twitter and started flagging some ads, and like immediately started getting these legal threats. I was like, well, that's kind of unusual. And then so I'm like, well, man, it's like one of those, like, you protest too much. She's like, well, what's going on? So then started researching. And of course, once you put something out on Twitter, people start feeding you stuff. They're like, hey man, I saw, here's what and so it just really quickly became obvious that this was a massive fraud. And so I started warning about it. I was eventually hit with a lawsuit, cost me a ton in legal fees to defend it. It was dismissed as a gag proceeding. They actually, the judge threw it out and kind of chewed out their lawyers as just a bullshit way to try to silence me. But they continued to raise money. So they raised almost $1 billion. So in terms of losses to investors, I think it's the third largest kind of fraud in Canadian history. And ultimately, when they sued me, it kind of pissed me off enough that I just aggregated everything that I had and submitted a report to the RCMP. Actually linked that on my Twitter bio, so anyone that wants to read that can actually see exactly what I dug up. And it's interesting that the two main projects that I focused in on, which was a project in Barrie and a project in Winnipeg, and I wrote extensively about in this report, were the basis for the charges against them. So, but it's indicative of how slowly the wheels of justice turn here in Canada. And unfortunately, what frustrates me is we're just so soft on white collar crime in this country.
Amen.
Like realistically, these guys, so they raised $900 million. Some of the court documents that I was able to obtain showed that in some cases, up to a third of that money that they raised disappeared immediately in fees.
Just like right into their pocket.
Right into their pocket. So we're talking about hundreds of millions of dollars gone. So these guys, so optimistically, so this charge carries a 2-year minimum prison sentence. So like, let's talk realistically what's going to happen. Maybe they get sentenced to 5 years, they serve a year and a half and they're out. And they're both going to walk away probably with 9 figures in their pocket. So where is the justice in that, right? So this is what frustrates me sometimes in Canada, is that we're so soft on white collar crime. Those guys would be going away for decades in the US. And that is bullshit. And that's, unfortunately, that encourages other bad behavior here.
So what exactly were they doing, just out of curiosity? So like they would raise a project in Barrie, Ontario, and how did that work?
What is the fraud specifically?
Yeah,
it was multifaceted, but one of the big elements was they would misrepresent the value of the land. So what they would say is, look, we're raising this money from investors, but don't worry, it's a safe investment because we only lend 70% of the value of the land. And if something goes wrong, we just seize the land and we get your money back. But one of the things that I noticed when I pulled land registry documents on this land is you would literally see where they closed on the land one day. So let's say for $10 million, they bought a parcel of land. The next day, they were registering $30 to $40 million against it. So they were raising 30 to 40 million. So then you go, well, how are they representing to their investors that there's collateral here? So they were misrepresenting the value of the land. They weren't disclosing the fees, right? It goes on and on and on. So it was, what I would say is it was abundantly evident with just like a surface examination. And I should also point out, and this will blow your mind, guys, these are guys that have both been sanctioned by the OSC for their role in a pump and dump scheme previously. and Jawad had been banned for life from the Mutual Fund Dealers Association. So these are guys that have a history. And so then you ask yourself, how did they ever even get licensed to be involved in raising capital for mortgages? So again, it gets back to this, we're just so soft on white collar crime. The regulatory apparatus is not what it should be in Canada. It's just, it's an embarrassment.
Well, we were driving up here to your place, and we were talking about, we were talking about mortgage fraud, and we're talking about, CRA, and, we're joking that they always kind of go after the lower middle class because it's the easy prey.
Mhm.
And, why hasn't the government linked mortgage underwriting directly to CRA? You could write, Ben, correct, I'm not a tech guy, but this cannot be that hard. You could probably write this code in a weekend to confirm that, hey, what you're declaring to your mortgage broker on your T4, it's not a fake T4 that you've created to get this loan, that we could link your direct, underwriting application to CRA to say, hey, you showed CRA 100K income? Great. Confirmed. It's just a snippet of code, but yet they've never done it. It's been, bantered in Parliament for years.
Mm-hmm.
Ron Butler's been on it.
Yeah,
All I would say is don't give GSC Strategies any idea for an app. they Speaking of white collar crime.
Yeah, no kidding. I don't have a good answer for you. I mean, I think it's such a blatantly obvious solution to what is clearly a problem in the market. We talked earlier about ways to enhance affordability and how it's just a whole bunch of small measures that move the needle. This is really low hanging fruit. Just clean up the bad actors.
I don't think anyone wants to. There's no way that clearly. What it tells me is the fact that this piece of code has not been implemented. Does anyone from the bank side and from the policymaker side actually want to solve the issue?
Well, I think that it raises one or two potential explanations. One is they deem it to be such a small issue that it's not worth the attention, which is scary. Or they think it's too big an issue, the horse is out of the barn, and if you start doing this, it would represent a credit tightening that could threaten valuations.
We can't.
And that's equally scary.
We
right?
can't.
So, which one of those two do you think is most likely? I don't know. They're both scary.
The latter. I mean, it's been
I think it's probably the latter.
It's been very clear that the politicians in this country on both sides of the aisle feel that housing valuations cannot go down because their voters are depending on those valuations for their retirement. And
you get the guy flipping the double bird.
The boomers. The boomers. Yeah. Maybe when they all die off, we can link the T4s to the credit bureau. But
to your point on ArriveCan, there was an article today in the Globe and Mail saying that ArriveCan's main contractor, GC Strategies, was paid without ensuring the work was done, according to the Attorney General.
I want that job.
In a second audit report involving the IT staffing agency, they found that the public servants did not ensure the company was charging fair market rates. So not only did they pay them without ensuring the work was done, but they did not do any due diligence.
And you know what's scary? So Rich, earlier you talked about how government, public sector employment's at 25-year highs. That does not capture all of these outsourced contracts, which have exploded.
Yeah, it's true.
Yeah.
I mean, that's what makes me so cynical. I'm learning, Keith, about sort of the massive deficit spending. I mean, we heard the Auditor General come out and say, that it's been a colossal F up. I mean, when you listen to Auditor Generals and lawyers and tax people speak, you have to sort of read, or Carolyn Rogers, my hero, speak between, say things in speeches. You have to read between the lines. And so when the Auditor General says none of the best practices were adhered to, what she's really saying is that it was a complete and unmitigated disaster and all these people should be in jail. And of course she doesn't have the power and be unlikely to happen. But that's why I have so little faith in sort of more government involvement in this project or that project or modular homes. I mean, what a fucking jerk, what a circle jerk that is. But all these projects that are meant to sort of solve the problems of the day, when they can't even keep track of $60 million for an app that we didn't need.
Fair point.
That was recreated in a weekend, I believe. So again, to my earlier point of CRA income verification, it's a snippet of code. Loonie Hour could be maybe even the contractor for that.
We'll charge you $100 million.
I'll undercut you by 50%. I'll do it for 50.
We're gonna buy that house right next door to you after we're done.
We're gonna own St. Catharines when this is
That's
over.
right.
So, I mean, in other words, it's we live in interesting times. Ben, we want to thank you so much for being a gracious host to have us at this very fine establishment somewhere in St. Catharines. And yeah, we appreciate. Hopefully, the audience, enjoyed the conversation, and hopefully, we can be invited back if Keith behaves himself. But Moan, again, thank you so much for your time, and it's been a
My
pleasure, as
guys.
always.
Let's do this again. And
Cool.
Let's go up and eat some tacos. I'm hungry.
All right, cool.
Wrap.
It's a wrap. Fucking A. God damn, it's getting cold.
Good
eh?
job,
fucking-
man.
I was worried
Fuck
about
me.
you.
I was like,
You're like this.
Fucking cold.
That was a lot of fun.
I Did you notice the mosquito go my eye? I had my last 5 minutes trying to get this guy out.
Man, that was great, man.
That's awesome.
You're awesome, man. I'm impressed with your breath.